Okay, welcome traders and, well, anyone trying to track a profit and loss of whatever they have on a daily basis. It could be trading, it could be your business, it could be a million different things. But, the primary use is probably going to be for traders trying to track their positions as well as their account performance based on equity change daily. So here's what I did, and as you know, I try to do one Excel template a week. It doesn't normally it's something to do with real estate cash flow models or um, different tools to help you. I tend to focus more on financial, accounting type tools, inventory management, that kind of thing. Uh, so today we're doing trading position tracker and account equity. So what that means is number one, we have a few different assets here, and this could be modified to however many assets you have. Now, since because I'm selling this whole template spreadsheet for only $20, I don't add any free time for me to go in and adjust. If you want adjustments, if you do want that, it'll be charged at the regular hourly rate of $35 an hour. But beyond that, this allows for you to have um, different assets, and then you track the different positions and the change in their value over time. The main purpose of this is for you to test new strategies or test your trading style. So it's not necessarily built to manage your entire account. However, it could be set up to do so. And if you have obviously more positions and more um, underlying assets that you trade, you could add that in accordingly. So, how does it work? Well, all you have to do is enter the position profit or loss over time for a given position. So normally positions, they might be a couple days or months or whatever. Um, all you're doing is trying to get as many days and capture what that position has done since you've opened it. And so you could have one position type that you're testing for this strategy. Say you closed on day 3, that's fine. Day 4, you open up a new position, brand new, whatever, but you're using the same strategy. You can start tracking that. So really, the positions you could think of as different strategies. And I just put different assets here to delimitate, so you could have, somewhat of a visual on, tracking multiple assets at one time. So all you do, let's say I'm testing the S&P 500 strangle, because this could be used for options, for trading, futures outright, buying and selling stock. It could be used for any kind of trading. It doesn't matter, because all you're tracking is how the profit or loss, what the profit or loss is on the position over time. So let's say I open up a strangle in S&P 500, I don't know, short, one standard deviation strangle, and it moves 3 standard deviations, and my size, oh, let's say we're down 15,000 after day 1. It moved a whole bunch. And then let's say day 2, the position came back half, 7,500, and I'm just exaggerating here to show how it works. And then let's say now day 3, it's at, down 5,000. And let's say by day 4, somehow it came back and now you're actually profitable in the position, you're up 2,000. And then day 5 and 6 we're saying didn't happen. And then let's just clear out this second position. You're only putting numbers where you see this lightish yellow tan color. This is the only place you're writing in the whole sheet. And then these are just days, marking just time passing. So, okay, so now we can visualize this, and I just kind of have it so you can see each of the different S&P positions, Apple positions, Nasdaq, and all it's going to show you is the standard deviation of each position. That's what it's tracking, which is being calculated over here. So you can see how position 1 has its own change, position 2 has its own change for each one. This change is what the account has moved from day to day. So obviously day 1 you put the position on, it hasn't moved. Day 2, now you've moved positive 7,500. That's a 22,500 actual move from high to low in, or from what your equity or what your position was here and what it is here. So that's what we're really trying to focus on, is how the positions move from day to day. Now let's say, look, it's back down 5,000. That's a $12,000, $500 move from 75 to -5. Then you're back up 2. That's a $7,000 move. Because what you want to see when you're trading, one important thing that's going to help you know what things, give you an idea of what it's like to trade a certain product or a certain strategy, is how are the daily moves and swings if you just held the position. Now, I haven't gone as far as to do the relative swing compared to your account balance or compared to equity usage. It's just really simple. It's specifically designed to help you track the profit and loss of whatever it is you're trading. So that's all you're entering is the P&L. So in your trading broker, I'm sure you'll have a positions, and each position will have its whatever its P&L is since you opened it. That number is all you're recording on a daily basis, and then everything else, all the standard deviations populate and the changes populate. So there's the position tracker in the visual. The second part of this spreadsheet is, I like it better, which is the account equity tracker. So this, again, you're only changing cells in this tan color. You're putting in the start date, and you have 3 different times during the day where you can enter your equity. Then it calculates an average automatically for you, and it tracks how your equity moves day to day. So this is no longer position specific, but it's actually tracking your whole account. And you just put your starting capital here and the current date. And based on that, it will give you your average equity level over that time frame. It will give you average change in equity, your standard deviation, and your total days active. And then we've got a curve here we're going to calculate, as well as the days won and lost. So let's say we started at, let's just say we started at 15,000. And let me just clear all these out. Okay, so let's say the position's at 15,500. Day 2, it's at 15,250. Day 3, you're at 15,365. 15,900. And let's do one more, say 16,500, and then we'll do a negative day of, let's say we go down to 14. Okay, so let's say we only want to track this actually up to the 10th of October. So we get a standard deviation of 250, which means the average change is 250. Well, the average move. Then you have an average change in equity of 200, which means if you just take the average of all your change in equities, you're basically losing $200 a day over 4 days, which makes sense. 2468, that'd be $800. And let me see, does that make sense? 250. No, that's saying the average change in equity. So on a given day, you're losing $200. Let me see. This actually does not take into account the date. So this is taking the whole entire change in equity in row 9. So let's say this is back up so we can illustrate this better. Let's say we're at 15,500 and 15,550. There we go. So now Your change in equity is 0. Why is that? Because from your starting equity to your ending, it's actually no change. Let's say if this was 16,000, it would take the difference between this and this and divide it by the number of days passed. So you can see 500. So that's how that is different than the standard deviation. The standard deviation is just telling you on a given day how much can you expect your equity to move. So it's going to be different for everybody, and it's really interesting, I think, for any trader to try to track this and see how their own account is doing. So let's just say the current date is the 12th. So we go where there's data. Now, what have we done with this is I've graphed the standard deviation. So this shows you on a given day what's the greatest chance your equity will move a certain amount. Well, this says between 93 and 293, that's where your moves are. So that's good because it's skewed towards the positive. You want the most amount of values falling in a positive direction if you're tracking your account equity. Let's say, and then we also have days won and lost. It simply takes your total days won, total days lost, and it just charts it out. Let's say for this curve though, what if our equity, we started at 15,000, let's say it goes down every day. Well, even though the standard deviation is still positive here, look at the curve now. And these are the most important numbers to take into consideration is the bottom axis. Now look at most of the numbers are falling in a negative area, and it's actually showing you have a very small chance to actually have a positive day in your account, and you have a very high chance to have these negative days. I think that's really cool to track. Let's say we make this back to positive. Now it's going up. The actual profit, and then I also track for you, this will automatically track the percentage change from the original balance of 15,000 here, or whatever you put into here. So you see it's up 1.67% as of October 12th. Well, now that we've made positive days every day in the account, oh, where'd my curve go? Oh, because its standard deviation is so always the same. Let me do this. 14.6. Oops. Now we got a deviation actually, because we need it. Has to be some kind of deviation. 15, 550. All right, now we get a curve, and now you can see the curve. Well, we're in positive territory, and there's actually look at the chance you have a negative equity day is right here, and the amount of that negative is right here. So this is a really great way to profile how your trading style is and track it. Very versatile. It's universal. You can use it on any kind of trading account, anything. And that's the same with these positions. Is you can do it on anything. You're just tracking what the profit or loss is on the position day to day, and then you're seeing what the change is over time. So that's about all I got for you. Let me freeze these cells. And if you want this template, like I said, it's only $20. I feel like that's a very fair value. I have a link in the description box below that will go to my blog where you can purchase it. I do take credit cards, debit cards, anything. I have partnered with Stripe to do that payment processing, so it's real quick. And then all you'll do is I'll get your email, or you can email me, Jason at smarthelping.com, and I will send you the Excel template once payment has been received via email. I also have directions here in yellow if you want to figure out, kind of get a nice walkthrough of what you're doing on all the tabs. You can see there we put all the positive days. Change one of the days to negative, and you can see our days won lost, and it's 20% negative days, 80% positive. Okay. I think we've done a really good job. I've done a really good job here of making this just super simple, but super useful and universal. Have a great weekend. I am off for now.